What's up everybody? Welcome to the Stocks channel. My name is Cory, and in today's special weekend update, we're going to take a macro level view of the stock market and do analysis on all of the indices as well as the VIX and Bitcoin. So first up, we'll take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we're looking at the SPX, and this is a weekly chart, so each candlestick represents one entire week's worth of price action. We can see we did close out the week above that price target at 41.52. And you can see up above the next price target is sitting up here around 43.06. Now the price action did finish the week over top of the 5 EMA, and on the weekly chart, all of these moving averages are still very strongly stacked to the bull side, and more importantly, they're all still positively sloping. So we still don't see any shift of momentum in this bull market, and we continue to grind higher towards all-time highs. Now let's go ahead and measure from the close on this week to the price target above, and we can see we have about 3% upside left to get to that price target. So very doable in the very near future, and possibly we'll even see those levels at 4,300 going into early May. Now the question is, when we hit that price target, are we going to trigger a significant stock market correction? So from those levels around 4,300 down to about the 20 simple moving average, and this is again on a weekly chart, that's about a 9.5% drop. If we go all the way back down to our resistance breakout trend lines, which now should be support, we're looking anywhere between a 14 and 16% drop. The 50 EMA is also around that range, so we are looking like we could be heading towards a stock market correction in the magnitude of about 10 to 15%. Now keep in mind, we don't want to try to call a top, and the stock market can continue to go higher, as we've already seen the stock market blasting through my other price targets. So we don't ever want to make any assumptions that we have to trigger a stock market correction at one of these levels, but we definitely want to be aware of the possibility and get defensive the higher we go. So there's all kinds of different ways you could get defensive in the stock market. But right now, just be aware the next price target is up there around 4,300, and we still do have a very strong bull trend on the way there. If we get to that level and we blast right through it and we continue to go higher, there's no reason to expect a stock market correction until we see something shifting in the technicals. More than likely, we'll see the first indications on a daily chart, because again, this is macro level analysis, so we're looking at weekly and monthly trends. So let's switch this over to the monthly chart, and we could see we are trading a little bit over top of that upper Bollinger Band. You already know this, and I'll say it again, that means we're getting a little too far overextended. We have one more week in the month of April, and then these bands will expand going into May, so it is possible we continue to go up outside the upper Bollinger Band, and then we'll be inside the Bollinger Bands in the month of May, and we won't need that retracement. But we are getting very close to a price target as we're getting overextended, and that could trigger a pullback and a mini correction before we can go any higher. Now on the monthly chart, you can still see we're well above the 5 EMA, and all of these moving averages are still stacked to the bull side and very positively sloping. So on the weekly and monthly chart, the SPX looks very bullish, and it still looks very healthy. We can also jump over to our bear bull survey, and we could still see that we do have a lot of retail bulls, and this is usually a contrarian indication, and you don't want to get greedy when everybody else is greedy. You want to get fearful when everybody else is greedy, and that's why you can see here that we have over 52% bulls and only 20% bears. Now remember, that doesn't mean the stock market can't go higher. The stock market is actually likely going to continue to go higher, but you do want to be aware of the fact that everybody is getting greedy as we're getting very close to these price targets. Remember, on the SPX, we're only 3% away from the next price target, and we have over 50% of the retail sentiment being bullish. So be aware of this indication and be aware of getting defensive the higher we go in this market. So back to the SPX, you can still see on the weekly and monthly charts, we're in very strong bull trends with very strong bullish price action. That's important to know, because if you're trying to call a top or you're trying to short this market, you're losing a lot of money because the market continues to go higher. So more than likely, we're going to see this price target met at 4,300 before we see any volatility in a stock market correction. We could see the trend is strongly trending towards that level, and the price action continues to show very bullish closes. So on the monthly chart, we're getting a little overextended, and on the weekly chart, we're still at the upper Bollinger Band, and those will expand going into next week. So I do think there is possibility we continue to expand higher, and then we're due for a correction after we hit one of these targets. Remember, the stock market loves to get ahead of itself and then overcorrect. So it'll get too far extended to the upside, and then it can go through a stock market correction to correct that overextension. Normally, the market gets too high too fast and then corrects that move before it can start going higher yet again. So get in that rhythm of the stock market cycles and you'll be a much more profitable trader. So let's jump over to the NDX, which is the NASDAQ 100 index, and we can see the NDX did close the week over top of the 5 EMA and still maintaining that strong bull trend. Remember, the tech sector already had a tech correction during that sector rotation, and now we're breaking out of that low and we're starting to form all-time highs yet again. Now the NDX price target above is 14,488. And from this week's close to that level, we have about 4% upside. So we have about 3% upside to the price target in the SPX and about 3.9% upside to the price target in the NDX. It's very likely we'll get to both of those price targets around the same exact time. So from that price target on the NDX back down to the 20 simple moving average on the weekly chart is about a 9% pullback. Back down to the 50 EMA is about a 17.5% pullback. So those numbers are very in line with what we saw with the SPX, with anywhere between a 10 to 15% correction and possibly even more for the NDX. Now remember, we're not trying to call a top, and that's not the point of what we're showing here. It's just as we get to these price targets, it does increase the probability that we're due for a stock market correction. So if we switch this over to a monthly chart, we can still see we're well above the 5 EMA, still in a very strong bull trend, and still trading within the Bollinger Bands, so we're not even overextended. If you're looking at my price target above, you can see that my price target is within the Bollinger Bands, and it does look like we could get there very soon. Keep in mind that a 3.9% move to the upside could happen within 1 week, and we could see those prices as soon as going into next week's trading session. So be mindful of these targets and get very defensive once we get to those targets until we see what the price action does at those levels. You don't ever want to get over leveraged near a top, and you don't ever want to be taking on a ton of risk near a top. Just be defensive, raise some cash, and get ready for a possible correction once we get to these levels. Jumping over to the Dow Jones weekly chart, we can see the Dow Jones is still holding up over the 5 EMA and still in that very strong bull trend as well. The Dow Jones down to the 20 simple moving average would be about a 6.9% drop, and down to the 50 EMA would be about a 12.3% drop. We can still see the Dow Jones is within the Bollinger Bands on the weekly chart, still maintaining the strong bull trend with the strong bullish price action over top of that weekly 5 EMA. Jumping over to the monthly chart, we can see the Dow Jones is getting just a little far extended over top of that upper Bollinger Band, but we only have 1 more week left in April, and those Bollinger Bands will expand going into May. So we're looking a little extended on the S&P 500 and the Dow Jones monthly chart, because that price action is getting a little overextended over top of the Bollinger Band. All the moving averages are still positively sloping, all stacked to the bull side, and the price action continues to hold up above that 5 EMA. On the Russell 2000, we're still trading sideways ever since we got overextended on that monthly chart, which we'll look at in just a second. But we see the price action closing above the 5 EMA on the weekly chart, still maintaining the bull trend, and we could see we did find support off of that 20 simple moving average. So the Russell 2000, while it is going sideways, it's still maintaining its bullish trend in price action. So jumping over to the monthly chart, we can definitely see why the Russell 2000 is trading sideways. Look back to the month of March, and we could see we were way outside the upper Bollinger Band, and we did retrace and come back inside. That is what triggers stock market corrections. When you get too far overextended, the correction has to correct the overextension to the upside, and you need a nice pullback, or you can correct through time and go sideways. The Russell 2000 did a little bit of both, where it had a nice pullback, and now it's going sideways while it's correcting through time. So on the monthly chart, we can still see the Russell 2000s in a strong bull trend, and it's well above the 5 EMA, and you could see where it was getting overextended over those last few months. Now the price action is back within the Bollinger Bands, and again, those will expand going into May, so we could possibly see all-time highs on the Russell 2000 going into next month. So more than likely, we're going to see the market remain bullish in the S&P 500 until we hit those price targets, and then we could possibly see a stock market correction because we will be due for a pullback. Now let's take a quick look at the VIX, and we can still see the VIX is closing below that critical resistance level at 18.2. We were above it intra-week while we were getting that pullback, but then the stock market rallied going into the end of the week, and we saw the VIX pulling back down below 18. So the VIX closed the week around 17.3, and that's still a very bullish VIX. Remember, the VIX is a fear indication, so the lower the VIX goes, the more likely we're going to see all-time highs. That shows there's not a lot of fear in this market right now, and if there's not a lot of fear, there's not a lot of selling, and the market's going to generally just drift higher. All right, next up, let's check in on Bitcoin, and we can still see Bitcoin struggling, which should be no surprise. I covered this at the end of March, and I said that Bitcoin was way too far extended and it was due for a correction. And the question is now, how far is this correction going to take Bitcoin down? Right now, we're trading below that support level at 51,000, and the next support level is right around 45,000. You can see the 20 simple moving average on the weekly chart is also around that $45,000 range, and that's where we're likely going to test a very critical support level. If we break down below that support, the bad news is we're likely coming all the way back down to $30,000 on Bitcoin. So don't be in a hurry to buy Bitcoin until we see where it's going to bottom. It is due for this correction, and it's finally here, and the question is now, where is the bottom going to be? So the strongest supports below 50,000 are going to be this $45,000 level and then this $30,000 level. Anything between 45,000 and 30,000 is usually in that flash crash range where you get a waterfall wave of selling, and it happens very, very quickly. Jumping over to the monthly chart of Bitcoin, you could see exactly why I was calling for a Bitcoin correction last month. In the month of March, we were way over top of the upper Bollinger Band because we were all the way down here on the Bollinger Band at 45,000 and Bitcoin was trading in the 60,000s. In the month of April, we extended that run up and we got even more overextended and hit in the mid 60s. And now we finally triggered that correction in Bitcoin and we're trading way down here at $50,000. So remember, this is macro level analysis. So calling for a Bitcoin correction last month was right on target because each candlestick represents one entire month. So while it may seem like a long time since I've said Bitcoin was due for a correction, it really wasn't because it was right on target. If you call for a correction in March and you get the correction in April, you're right on schedule. Remember, calling a top is very difficult and nobody truly knows exactly when something is going to reach a top and go through a correction. But if you did start shorting Bitcoin in March and you were at the high of the month close right around 59,000, you're still trading $9,000 lower right now. So you don't necessarily need to call the top perfectly to understand when corrections are going to take place. If something gets too far extended, it's due for a technical correction. I guarantee you there's going to be a lot of people blaming this Bitcoin correction on all kinds of different news that happened lately. They're either going to say it has something to do with this news article or this news article, and that's why Bitcoin's going through a correction. But if that were true, how could I have predicted a Bitcoin correction 1 month ago? This is 100% technical, and the news is always going to be the scapegoat. Don't fall into that trap that the news is why the market is moving. There's always going to be some news you can come up with why the market went higher or why the market went lower. It is strictly the scapegoat. The technical analysis was already calling for a Bitcoin correction. So right now, just be patient on Bitcoin and wait to see where it's going to bottom. You can see on this monthly chart, the 5 EMA is right around $44,000 and the 13 EMA is all the way down here at 30,000. So those numbers around 45,000 and 30,000 keep repeating no matter what chart you're looking at, and those are going to be the most critical support levels. We're likely going to see Bitcoin find support at 45,000 or it's going all the way back to 30,000 before it finds support. So be patient and let this correction play out, and then you'll always have a better buying opportunity right around the corner. So just to summarize this week's macro level analysis, as you can see, we're getting very close to the upper price targets and we're only about 3 to 4% away, depending if you're talking about the S&P 500 or the NASDAQ 100. Remember that once we get to these levels, you want to be very defensive and get ready for a possible stock market correction. Does it guarantee we'll get one? No, but it is better to be prepared for the worst and hope for the best than it is to get caught off guard and be over leveraged near a very critical market top right before a major correction. Remember, this correction could be anywhere in the magnitude of 10 to 20%, and you don't want to get caught off guard. We will likely continue to go higher in this market until we hit these price targets, and then we'll likely see much more volatility and possibly a lot more selling in the market. So we'll continue to watch these critical levels very closely, and remember that I do daily stock market analysis where we break down the price action day to day in way more detail. Also remember, on the Stocks Channel Discord, I do intraday updates and analysis to help you stay on the right side of the market so that you always understand exactly what's going on in this market. I also bring new trade ideas to you weekly, so if you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So remember to be disciplined in this market, and don't forget that we are getting a lot of retail greed, and eventually the greed will be punished and it will be a lot of selling to follow. So remember, you want to be fearful when everybody else is greedy, so start planning your trading strategy now and understand when you're going to start taking profits and getting more defensive in this market. On the weekly chart, we're still bullish, so I'm not calling for a top and I'm not calling for a major correction. I'm just saying that increases the likelihood we're going to see a correction once we get to these critical price targets. So don't be scared of the stock market, just make sure that you're prepared. So thanks for watching, everybody. I hope you're enjoying your weekend, and as always, I will see you in the next episode.